So I'm here to talk to you about how you can protect your assets. When you think about it, fewer and fewer people are actually going to offices, aren't they? Most people are working from home. So there's going to be lots and lots of empty buildings around. So go and see that lady there and get a course. Okay, so who am I and why should you care? My name's John Ireland from Legacy, and we're estate planners. We are not instruction takers, and I'll show you the difference in a minute. I spent 30 years as an independent financial advisor, and financial advisors, any financial advisors in the room? No? Well, you'll probably know that we're legally obliged to ask people, have you got a will? Most people were saying, oh, I must get round to it, weren't they, Vicky? So most people were saying, I must get round to it. So you go and see them next year. Did you do that will? Oh, I haven't had time. It's so busy. So they just didn't do it. So about 1996, I started taking will instructions from clients. I now work with a firm of lawyers based in the Midlands. They're all members of an organisation called STEP, which is the Society of Trust and Estate Practitioners. Yeah, we help our clients now with wills, trusts and lasting powers of attorney. Basically, you'll go to a solicitor or bog standard will writer and they'll just take your instructions. They won't give you any help, they won't give you any guidance, okay? It's often the loss leader for solicitors' firms. They don't make money from your 150, 200, 300 quid, whatever they charge you getting a will done. They make money when you shuffle off this mortal coil by acting as your executor, so be aware of that. But what we do, given my financial services background, is to look into my clients' circumstances. I want to find out about what assets they've got. Then I want to find out what the client wants to achieve as well. And it's only then, really, that I think it's an idea that I can offer them some solutions and show them how they can protect those assets. And my mission today is for you all to leave here with a lot more knowledge on how to do that. Is that all right? Is that a bit better now? You got it? You know what I'm standing here for now? Fabulous, okay, because I have to look at that. I forget as well, you know. Right, it's going to be an interactive presentation, and I ask the questions, and you get the prizes. Fabulous. This is something to remember, because there is no inheritance tax between husband and wife. You are either married, or you are in a civil partnership, in which case the law recognises that, and there will be no inheritance tax between those two people. If you are cohabiting with someone, living with someone, whatever, you're in trouble because, yeah, there will be inheritance tax, right? But dying without a will means that you're governed by the intestacy rules, which means that at that time, his wife got the first £250,000 of the estate and then half the rest. The other half went to the kids. That's now increased to 270,000, by the way. So, estate valued at 1.2, she got the first 250, so therefore there's 950 to be divvied up between her and the kids, yeah? So, the remaining children get £475,000 between them, so does she. Don't forget, there's no inheritance tax between husband and wife. But the children's inheritance at £475,000 minus his nil, is there a pointer on this? You don't know. Minus his nil rate band of £325,000 meant a taxable estate of £150,000. Now, inheritance tax in the main is 40%. There are 3 rates of inheritance tax, but it's 40%. So, without a will, the kids paid a £60,000 inheritance tax bill that they didn't need to pay. I just wonder if they think is so funny now. There you go. Right, 2 things certain in life, yes, death and taxes. What do we all know then? What's on that piece of paper that you get from the registry office? Date of? Death. Date of birth. We all know that, don't we? Don't know. We all know that date of birth, or mostly. Well, you were created, obviously. Is the lab still open? Oh, there you go, date of birth. We all know our date of birth. What is it we don't know? Date of death. We don't know. Date of death, correct? Yeah? And I can attest to that. About 3 years ago, I was sitting with some friends, suddenly started getting some pains in my chest. Long story short, went to the hospital the following day. Doctor said, oh yeah, look, we'll wire you up to that machine. Those 3 things there, your heart valves are all blocked. So I said, what next? He said, triple bypass. So I've been cut from there to there. And if I hadn't gone in, I'd have been dead within 2 weeks. So please get something done about this if you haven't done anything about it. because tomorrow is not guaranteed. Yeah? Right, 7 out of 10 people in the UK do not have a will. Yes! Well, I'd be out of business otherwise, wouldn't I? Why do you think that is? All right, let's just have a break in the proceedings, shall we? These are nice glasses. Whose are these?
Those are mine.
Are they yours? Not very macho though, are they? I thought they were Vicky's. There you go. Okay. Right, who's got a will? Fabulous. Have you got a will?
No.
Good Lord. Do you know what? I had to borrow this from Mark. All right? Sorry, mate. And if you haven't got a will, you might as well be doing this. So where's the nearest bar? Is there any bar around here, a pub or whatever?
Yeah, well, there.
There? Okay. Go and get some sellotape. You can buy the drinks later. I'm good like that. Right. Okay. 7 out of 10 people don't have a will in the UK. Why? What's the most heard reason that I have on a regular basis? Too busy. You've seen it before. Too busy. Well, the answer is really time. People tell you, oh, solicitors aren't open in the evenings, I can't go at weekends, blah, blah, blah. Well, they are really. Because 1 week a year, at least, you can get a free will done. It's called Free Will Week. Not very imaginative, I know, but that's the Law Society. But you can get a free will done. No help, no advice, and they will generally be your executors, and they would ask you to make a small donation to a local charity, possibly. Dave, I've been speaking to Dave for about 6 months, okay? Very, very busy guy, built up a portfolio with his partner, Joanne. 8 HMOs, I think it was. Yeah. All of the properties were in Dave's name. All of the money for the rental income was going into his bank account, all right? And that still is not unusual in the property world. Everything's going particularly well for them. He's driving here, there and everywhere, looking at HMOs, looking at various buildings, negotiating with landlords, etc., etc. When one evening he was driving down the M4, in his rather large white Range Rover, 100 miles an hour as usual, and had a heart attack. Joe had the forethought to pull the car over to the hard shoulder, where unfortunately he had another heart attack and died on the spot. He'd meant to get a will, because he was been telling me for the last 6 months, previous to him dying, yeah, I'll get it done, I'll speak to you next week, but I'm really busy this week because I've got to speak to my mortgage broker, or I've got to go and view a commercial property, or I've got an HMO that I'm looking at as well. Never got it done. And I'm going to show you the repercussions now. Now, as they die without a will, he died without a will, and they weren't married, Joe was entitled to nothing. She didn't get a thing, okay? It all went to his parents. The mortgages, all in Dave's name. Mortgage companies have no sense of humour, as you'll probably know. And of course, he was far too busy to get any life insurance done, and they wanted their money back. Oh dear. Dave's bank accounts were all frozen. No money in, no money out. That meant that the tenant's rent was returned to them. What would your tenants feel like? Would they think that, oh, blimey, we might be getting evicted here? No utility bills were being paid, no council tax, threatening letters started to arrive. That's what they do. You know, 3 or 4 payments missed, that's what they do. The value of the portfolio, give or take, was around about £800,000, so inheritance tax had to be paid on anything above his nil rate band of 325, yeah? So the balance of the estate, 325 from 800, is 475. What's the rate of inheritance tax? 40%? Do you say 40%? Do you want a chocolate? No, go on then. 40%, okay? So that's a tax bill of £190,000 because Dave was too busy to see me to do a will. Oh dear. So, if they had wills, obviously it would have been a different story, okay? Now, if they'd owned the property in the way I was suggesting, which is the best way of owning property with 2 people, Vicky?
Company.
No. Tenants in common. Thank you very much. Well done. Okay. I'm not giving you a chocolate for that. There's only a quarter of an answer. Right. So they'd owned the property in a different way. It would have been better, okay? Because whilst they weren't married, there still would have been inheritance tax, but only 30 grand, not 190. Because he would have owned half the portfolio in his name, half the portfolio in her name. Yeah? They could own assets up to £325,000, but his assets were £400,000. So if you take 325 from the 400, gives you a taxable estate there of £75,000. At 40%, that's only 30 grand, not 190. Joe could have raised that money by remortgaging, selling the property, whatever. Make more sense, wouldn't it? Now, if they'd been married, of course, there would have been no inheritance tax because There's no inheritance tax between spouses, all right? I think I'm going to be a celebrant. I could make a fortune doing that, couldn't I? Anyone not married here that wants to get married now? I'll do it. Cut price. Okay, £6.1 billion, and that's not his bank account. What does that figure represent? Anyone got an idea? It's the inheritance tax paid in 2021, okay? That's a 14% increase on the biggest one so far, which is 2014-15 tax year. So not having a will is also going to mean quite a few other things. For example, you could have avoided or reduced inheritance tax. We've seen that with Rick Mail. We saw that with Dave. You'll have no say about who gets what when you die because you haven't written it down. Your partner or your family, they're going to suffer unnecessary financial hardship. It's going to be an absolute flipping nightmare. Your bank accounts will be frozen if you haven't got a will, if you die. Okay? It's going to cost £5,000 at least to sort the mess out. Blah, blah, blah. If you've got specific gifts you want to give to people as well, I don't know, you'll find a collection of British beer mats. You've still got those, haven't you? You'll find a collection of British beer mats. Who's going to get them? No one knows. What about children under the age of 18? They will go into care if you don't have a will and you die. Oh dear. Someone has to administer the estate because you haven't done a will, therefore you haven't appointed an executor, and that's generally the executor's job. Okay, and that's going to cause a lot of friction if you've got an ex-spouse on the case as well, believe it or not. Now, partners, business, etc. If you die, how do we know that the family can carry on the business? Who's going to get the shares? In fact, if you die and you haven't got a partnership agreement, under the Partnerships Act 1890, I think. Is that right? Do you remember that? 1890? See, sage nod from our fabulous lawyer here. Have a chocolate, by the way. How are you, Maria? You're all right? I know. She's seen me 17 times as well. Yeah, who gets the shares in your business, okay? Your business could be wound up. It's a nightmare, guys. If you haven't got that done, get it done. The other thing is there's no instructions about your funeral. One second, because this is important, all right? There's no instructions about your funeral. No one knows whether or not you want to be buried or cremated. I was thinking that I keep getting this wrong. It's not a hamper, is it? What they call the things you put in the ground when people get a casket? You could get a body in a hamper, couldn't you? If you get it in there before rigor mortis sets in, you just break an arm or two, get them in the ground. Happy days. They don't care, they're dead. Most people in the UK own their property like this, joint tenants. And that's because conveyancing solicitors in general will say to you, look, if one of you dies and you leave it to the survivor, it's easy if you're joint tenants. The survivor then owns the whole lot. Yeah? Everyone agree with that? No problem? Okay. Anyone see any problems with that? Not yet. Right, he dies. Guys, we die first because we work harder, don't we?
Yeah, that's right.
Love that one. Right, and believe it or not, a few years down the line, she finds someone else. And he's got a lot bigger bank balance. Okay? And he's a lot better looking than you, okay? So there you go. And that's difficult to believe as well, I know, but there you go. So she marries someone else, okay? That doesn't work out and they get divorced. Do you think the house might be in danger? Because she owns it now. She owns the whole house in her name. Oh dear, do you think it might be in danger from her divorce? What happens if she dies in this new relationship? Who gets the house then? The kids? Him. What happens if she's not married, okay, got the 2 kids and she needs long-term care? Can she be forced to sell that property? Yep. Okay, so let's look at a way that we can own the property in a different way, shall we? This is called, Vicky?
Tenancy common.
See, it works. Tenants in common. Big round of clap for Vicky, please. Very much. Right, tenants in common. Okay, so this is how I own my house. I own that half. My wife owns that half. And sometimes it's the other way around, and sometimes she owns the whole lot. I'm a bloke. I've been married 3,000 years, and I do as I'm told. So we own the property like this as tenants in common. Okay. So that means that if I die, my half gets left to my wife into a trust. This is a very simple discretionary trust, and these have been around for over 1,000 years. Okay. The next line of beneficiaries are the kids. My wife's also set up a trust for me as the first beneficiary, and if I die, it'll go to the kids. So, let's just say I die and she meets someone else. Can he force her to sell the house if they get divorced?
No.
No? Why?
It's in trust.
That's right. That bit doesn't belong to her. That belongs to her trust. Yeah? Everyone got that?
Yeah.
It belongs to her trust. She can sell it if she wants to, because she's a beneficiary and the trustee, but she can't be forced to. What happens if she needs long-term care? Can they force her to sell the property? No. Same thing. What happens if, when they both die, and the daughter's married a horrible spotty biker? Apologies to spotty bikers in the room. Can he then turn around and say, oh, sorry about your mum and dad, by the way, I don't love you anymore. I want some of what they left you?
No.
No. Why? Because it's in trust. The kids, mum and dad are both dead. The assets are in the trusts for the kids, okay? Not for creditors, not for their ex-husbands or wives. It's protected against long-term care. And the other thing for you guys to think about here, if you're building up portfolios, if you gifted them as a direct gift to your kids, not only is it in danger if they were to get divorced, but eventually, none of us are here forever. When they die, there's going to be a second raft of inheritance tax. Within 3 generations, all the hard work at 40% a pop is all gone in inheritance tax. With this planning, it protects it. Okay, so what's the lasting power of attorney and why do you need one? Well, a power of attorney is a legal document that gives someone that you choose, that you know, like and trust, obviously, the legal authority to act for you if you lack the capacity to act for yourself. There's 2 types, health and welfare, property and financial, okay? And without lasting powers of attorney, there's going to be, in terms of property ownership, there's going to be some major repercussions. Who's going to deal with your new tenant? Because don't forget, no one has your legal authority to do this. What about getting the repairs done on your property?
If you were to do it venture with someone, I'm sure your business partner would have they can basically do this.
No, because no one has your legal authority to act for you.
But they have a legal authority to act without.
Or to act without you, account, to look after that account, whether it's bank, pension, investments, whatever. The social services also have a minimum of 1 meeting per month, okay, because you're deemed vulnerable, and they charge 320 quid for that 1 meeting. If they have more meetings, they'll charge pro rata, and also they need to take you to the dentist or whatever, they'll charge pro rata for that. £6.5 billion, guys. That's more than the inheritance tax that's been taken. So if you are running a limited company and you're taking a salary, the company can pay for your life cover. Okay, and it's not a P11D, it's not a taxable benefit. So basically, if, say, you're paying personally £100 a month for your own life cover, you've got to earn enough money to pay for your national insurance, your employer's national insurance, and of course your income tax. They round that up to 160, yeah? So that means that if the company, you're going to earn 160 to get 100 quid in your bank account. If the company paid the £100, the company claims tax relief against the £100, you end up paying 80 quid. And it's in trust. Good? You like that one? Okay, if your policy is not in trust and you die, the value of the cover pays into your estate, increases the value of your estate, and it could be taxed at 40%. Oh dear. Your beneficiaries, if it's not in trust, are going to have to wait until probate as well before they can benefit from any money that you're insured by. Is your policy more than £325,000? No, if it is, and your well-meaning but stupid independent financial advisor puts it all into one trust, anything above 325 in 10 years' time is going to get taxed at 6%. So the moral of the story then, guys, is do get yourselves a tax-efficient will, get lasting powers of attorney and put your policies in trust, and protect your assets. Do something now, please, before it's too late.